Welcome back to the deep dive. Today, we're going to examine Blackstone Inc.,
ETFs.
BX,
That's right.
to help you decide if this alternative investment firm is right for your portfolio. It's pretty massive. They have over $1 trillion in assets under management.
The biggest in the world.
Yeah, it's the world's largest alternative asset manager. They do everything, it seems. Private equity, real estate, credit, infrastructure. We're going to try to break down all those pieces today, look at their financials, recent acquisitions, even get into ESG considerations.
Should be interesting. Blackstone has quite a history.
Yeah, why don't you walk us through that? How'd they get so big?
Well, they started back in 1985.
Okay,
Two guys, Peter Peterson, Steven Schwartzman.
I've heard of Schwartland.
Yeah, pretty famous in finance. And the name Blackstone. Kind of clever, actually. You know, Schwartz is German for black. And Peter, of course, from the Greek word for stone. So, Blackstone. They started as an M&A advisory boutique, helping companies merge and acquire. Like back in '87, they advised on that big E.F. Hutton and Shearson Lehman Brothers merger.
Big deal at the time.
Huge. But private equity, that was always their goal. Buyouts, taking companies private. Trouble was, they didn't have much experience. Nobody wanted to give them money for their first fund. Then Black Monday happened, the crash of '87.
Wild times.
Ironically, that actually helped them close that first fund. Suddenly, everyone was looking for bargain deals.
Opportunity and chaos. So let's jump to the present. How are their financials looking? Dividend.com's got their forward dividend yield at 1.96%, which puts them in the bottom 50%. Not exactly inspiring.
True, not the highest yield out there, but TipRank shows they've outperformed their industry in earnings and sales growth this past year. They've beaten EPS estimates 75% of the time, sales estimates 100% in the past 12 months. So they're making money.
Okay, that's promising. I did want to ask about this EQT Corporation deal I saw, a $3.5 billion joint venture for EQT's midstream assets.
Right. Midstream assets are all about transporting and storing natural gas. Pipelines, compressor stations, those sorts of things.
Gotcha. So what's the significance here?
Well, EQT gets to reduce its debt, and the joint venture, they're targeting an area with, projected high electricity demand growth.
Smart.
Yeah, and the total valuation for this JV, almost $9 billion, shows a lot of confidence from Blackstone in the energy sector, in natural gas specifically.
Interesting. Speaking of the future, Blackstone seems very invested in traditional sectors. What about innovation? Where do they stand on that?
They are definitely aware of it. On their website, they talk a lot about their commitment to technology and, promoting diversity in tech.
Okay.
They've got this Women Innovators Program, the Diverse Innovators Program, all about giving opportunities to folks who are underrepresented in the field, resources, mentorship, that kind of thing.
Right.
And then there's this Sprinternship program designed for female students interested in software development, gives them like a real taste of the industry early on.
Good for them.
Yeah, definitely.
So big picture now. Is Blackstone a good investment? What's the valuation looking like?
Well, TipRanks has Analyst's price targets ranging from, a low of $125 to a high of $230. The average is somewhere around $180.
Okay.
But then you look at Zacks. They give BX a D grade for value growth momentum. Not great, however. They do have an A for earnings estimate revisions.
So analysts are becoming more optimistic.
Exactly, and that can be a strong signal.
Let's talk dividends. Dividend.com shows they've consistently paid them quarterly, but there have been some swings in dividend growth.
Yeah, their dividend growth, CAGR, it dropped a lot in 2023, 32.79%, but the forecast is for it to rebound next year, about 3.92% growth. So, it's a bit volatile.
Not ideal for income investors.
Yep.
All right, last big topic I wanted to hit, ESG factors. With Blackstone's diverse holdings, there's got to be some stuff to unpack
Oh,
there.
absolutely. One that comes to mind, their involvement with Southern Cross Healthcare in the UK.
Yeah, heard about that.
They did this sale and leaseback strategy, which, some folks blame for that company almost going bankrupt back in 2011.
Not a good look. Any other ESG red flags?
Well, in 2023, they had that issue with PSSI.
Okay.
A slaughterhouse cleaning company owned by Blackstone. They got fined $1.5 million for using child labor.
That's awful.
Yeah, bad press for sure. And then, of course, there's the whole deforestation thing in the Amazon rainforest, which some of their investments are tied to. So definitely some ethical questions there.
For sure. So to sum up, Blackstone's got strong financials. They're making moves in innovation, and their valuation, well, it's a mixed bag. But we also can't ignore these ESG concerns. In the next part of our deep dive, we'll dig deeper into their investment strategies and the impact they're having on the global economy.
So Blackstone, they've got their fingers in a lot of pies, right?
Yeah, to say the least.
Let's dig a bit deeper, shall we? Starting with, well, their bread and butter, private equity.
Yeah, and some of their big wins there, and maybe some not so wins.
Oh, they've got a massive private equity portfolio, all sorts of industries all over the world. Early on, they had a big success with Allied Waste, a waste management company, not very glamorous,
Right.
but they turned it into a national powerhouse. Consolidated smaller businesses, streamlined operations, really knew how to make it grow.
Interesting.
Then there was Hilton Hotels. They acquired it, took it public, made a
Of
killing.
course, Hilton.
Yeah. But not everything's a home run. The Jack Wolfskin, the German outdoor apparel brand, that one didn't go so well. Ended up handing it over to lenders in 2017.
Yeah. Happens to the best of them.
And while we talked about Southern Cross Healthcare, a reminder that sometimes their strategies can backfire.
For sure. Okay, let's move on to real estate. They're huge in that space, right?
Yeah.
From skyscrapers to shopping malls, what are some of their standout plays there?
Oh, absolutely. They're a major force in global real estate, buying, managing, selling properties for big profits. Back in 2006, they bought EQ Office, one of the largest office property owners in the U.S., paid a whopping $37.7 billion for it. Yeah, big money. They've also been active in retail, acquiring companies like Centro Properties Group US, Excel Trust.
So what's their strategy in real estate? How do they make it work?
It often involves finding undervalued assets. Then they improve operations, make things more efficient, and really trying to time the market for the best returns.
Makes sense. Okay, with the world shifting towards renewable energy, I'm curious about their energy investments. Are they adapting to this transition?
It's a mixed bag, really. They've invested a lot in traditional energy. Like in 2014, they bought Shell Oil's stake in a shale gas field.
Hmm.
But they're also dipping their toes into renewables. Investing in companies like Vivint Solar shows they're aware of the need to diversify. And of course, there's that EQT joint venture we discussed. Seems they see natural gas as a bridge fuel, while we transition to a lower carbon economy.
Right. Blackstone also does hedge funds and credit investments. What can you tell us about those?
Those are more for sophisticated investors, folks looking for alternative ways to grow their money.
Yeah. Higher risk, higher reward.
Exactly. Their hedge fund arm offers various options, funds of funds, proprietary funds. It all depends on your risk appetite. And in credit, they invest in all sorts of debt, from investment grade to distressed. They're big players in the CLO market, collateralized loan obligations. Basically, they pool loans and package them into securities.
Okay. Pretty complex stuff.
Yeah, not for the faint of heart. But Blackstone, they're experts in credit analysis, risk management. They know how to navigate those markets.
All right, so Blackstone's investments are obviously significant. But what about their overall impact on the global economy? How would you describe that?
It's a double-edged sword, really. On one hand, their investments can revive struggling companies, create jobs, revitalize entire industries.
That's the positive side.
Right, and their involvement in infrastructure projects. Huge potential there, improving transportation, energy systems, all sorts of essential services that boost economies.
Makes sense. But there's got to be a downside, too.
Of course. Their relentless pursuit of profit has drawn criticism. Some say their aggressive use of leverage and buyouts, borrowing heavily to finance acquisitions, could threaten financial stability.
Interesting.
And their emphasis on efficiency can sometimes lead to job losses, cost-cutting measures that hurt workers. Plus, their investments in sectors like for-profit healthcare or fossil fuels, well, those raise ethical questions.
Definitely food for thought. With the rise of ESG investing, how's Blackstone responding to that? Are they making genuine changes or just paying lip service?
The pressure's on, for sure. Investors, regulators, everyone's watching their ESG performance. They're definitely trying to improve their image. More transparency, internal ESG frameworks, engaging with stakeholders.
The steps.
But there's still skepticism. Those controversies, Southern Cross Healthcare, PSSI, the Amazon deforestation issue, they haven't been forgotten. The challenge for Blackstone is to go beyond talk, implement real ESG initiatives that match their words with actions. It's not just about avoiding risks anymore. It's about actively seeking investments that make a positive impact.
Right, putting the money where their mouth is. So Blackstone, a financial giant with a complicated legacy, their investments have shaped industries, created wealth, but also sparked debate about the role of capital in society. In the final part of our deep dive, we'll look at Blackstone's future prospects and the challenges they'll face in an ever-changing world. So we've looked at the past, present. What about the future? What's next for Blackstone?
Well, the investment world's constantly changing, right? Technology is disrupting things, geopolitics, investor preferences. Blackstone knows they need to adapt to stay on top.
I imagine so. What are they doing to stay ahead of the curve?
One thing they're doing is embracing technology big time. They've been investing a ton in data analytics, artificial intelligence.
Makes sense.
It's all about using data to make smarter investment decisions, spotting trends, understanding markets better.
So not just gut feeling anymore.
Data helps, that's for sure. And then there's that whole diversity and inclusion thing we talked about.
Right. They're programs for women in tech.
Exactly. I think they're realizing a diverse workforce isn't just, politically correct. It's good for business. Different perspectives, better ideas, that kind of thing. Plus, they want to attract top talent, reflect the communities they serve.
Makes sense. Okay, back to ESG. We've talked about some of Blackstone's controversies, but are they really changing, becoming more sustainable, or is it all just for show?
The pressure's on, that's for sure. Everyone wants to see real ESG commitment, not just empty promises. They are making efforts, though. Better disclosures, internal frameworks, engaging with stakeholders. But some folks are still skeptical. Those past issues, Southern Cross Healthcare, the child labor thing, the deforestation concerns, they haven't gone away. Blackstone needs to walk the walk, not just talk the talk. Find investments that make a positive impact, not just chase profits.
A lot on their plate, it seems. What are some of the biggest challenges and opportunities you see for them?
Well, the world's a volatile place, right? Geopolitical uncertainty, interest rates, inflation, all that can affect their investments. They'll need to navigate those waters carefully. But there's also a huge opportunity in sustainability, renewable energy, sustainable agriculture, all that. That's where the future's headed. Blackstone needs to be smart, manage risks, and show they're serious about ESG.
So for our listeners, what's the takeaway here? Is Blackstone a good investment or not?
It's complicated. They're a powerhouse, no doubt. Great track record, diverse portfolio, global reach. But they've also got their share of controversies, their aggressive tactics, the focus on profits above all else, their mixed ESG record. It really depends on your personal investment goals, your risk tolerance, and your values. Do your research, look at all sides, maybe talk to a financial advisor. It's your money, your decision.
Great advice. We've covered a lot today, from Blackstone's origins to their strategies, their impact, and the challenges ahead. It's a fascinating story and a reminder that the world of finance is never simple. Thanks for joining us on this deep dive into Blackstone. Remember, knowledge is power. Stay informed, make smart choices. And don't forget to subscribe to our YouTube channel for more deep dives into the world of finance. We love hearing from our listeners, so leave a comment below and tell us what you'd like us to cover next. Until then, happy investing.